I'm excited to announce that new listings forms were just released yesterday afternoon, July 30th. There's 5 new forms for you to utilize. We have the exclusive right of sale listing agreement for single agent, for transaction broker, for no brokerage relationship, and for consent to transition to transaction broker, in addition to an exclusive brokerage listing agreement. In this video, we're going to go ahead and focus on the exclusive right of sale listing agreement for transaction broker. Although the majority of the changes are going to be in the compensation portion of the agreement, I'm going to run through the entire agreement for us in this video. So it states the exclusive right of sale listing agreement is between the seller and the broker, and they've added the word "and brokerage." So the second line begins with brokerage, which is something new. Authority to sell the property. The seller gives broker an exclusive right to sell the real personal property, collectively property, described below at a price and terms described below, beginning on whatever date you determine, terminating 11/59 on whatever the termination date will be. Upon full execution of this contract for sale and purchase of the property, all rights and obligations of this agreement will be automatically extended through the date of the actual closing of the sales contract. When we talked about the buyer broker agreements in the last series of videos, so you don't have to renew anything in this listing agreement. If you're under contract, it continues through. Seller and broker acknowledge that the agreement does not guarantee a sale. This property will be offered to any person without regard to race, color, religion, sex, handicap, familial status, national origin, or any other factor protected by federal, state, or local law. The seller certifies and represents that she, he, it is legally entitled to convey the property and all improvements. Section 2 remained exactly the same. We have the street address and the legal description. We know that we always use the long legal description when we're filling out a contract. And then we have personal property, including appliances, and then occupancy, whether the property is or is not occupied. For the price and terms of the contract, the property is offered for sale on the following terms or on other terms acceptable to the seller. The price the property will be listed at, what financing terms the seller is willing to accept, cash, conventional, VA, FHA, or other. Other might be a USDA loan, it might be a physician loan. There's a lot of different options out there. Check the box if the seller is financing. It says the seller will hold a purchase money mortgage in the amount of whatever the dollar amount is with the following terms. Of course, if you're going to do this type of mortgage, we would recommend that you contact an attorney immediately after the listing. Line 26 talks about an assumption of an existing mortgage. The buyer may assume an existing mortgage for whatever the dollar amount is, plus an assumption fee of whatever that dollar amount is. The mortgage is for a term of however many years, beginning at the date at an interest rate of. Whether it's fixed or variable, if it is variable, you're going to describe that on the line provided. Lender approval of assumption either is required or is not required or is unknown. And then we have a notice to the seller. You may remain liable for an assumed mortgage for a number of years after the property is sold. Check with your lender to determine the extent of your liability. Seller will ensure that all mortgage payments are required and required escrow deposits are current at the time of closing and will convey the escrow deposit to the buyer at closing. Extensive regulation affects seller finance transactions. It is beyond the scope of a real estate licensee's authority to determine whether the terms of your seller financing agreement comply with all applicable laws or whether you should be registered and or licensed as a loan originator before offering seller financing. You're advised to consult with a legal or mortgage professional to make this determination. Item C, seller expenses. Seller will pay mortgage discount, other closing costs, or concessions not to exceed a specific dollar amount, and any other expenses the seller agrees to pay in connection with a transaction. So the new part that was added here was or concessions not to exceed. We have the broker obligation. The broker agrees to make diligent and continued effort to sell the property in accordance with this agreement until a sale contract is pending on the property. This includes, except when not in the seller's best interest, cooperating and communicating with other brokers and making the property available for showings. This last sentence is something new that's been added into this version of the contract. Number 5, multiple listing service, no changes here. Placing the property in the multiple listing service, the MLS, is beneficial to the seller because the property will be exposed to a large number of potential buyers. As an MLS participant, the broker is obligated to enter the property into the MLS within 1 business day of marketing the property to the public, or necessary to comply with local MLS rules. That is what our MLS dictates. This listing will be published according to the MLS unless seller directs broker otherwise in writing. Seller authorizes broker to report to the MLS this listing information and price, terms, and financing information on any resulting sale for use by authorized board, association members, and MLS participants and subscribers unless the seller directs the broker otherwise in writing. What that's just saying is once the property closes, that information will be uploaded into the MLS, which helps other realtors when they're preparing market analysis and also assists appraisers when they're putting their reports together. All right, on the bottom here, the bottom of every page, we know that we have initial sections, but they've changed this a little bit. It says seller and broker/authorized associate. So authorized associate is new wording, and they've added that in at the bottom of each page. They've also added in the sentence underneath the initials. The parties acknowledge this form should not be used to share offers of compensation to buyer brokers or other buyer representatives via any field in the multiple listing service. All right, number 6, broker authority. No changes here either. Says the seller authorizes the broker to market the property to the public unless limited in paragraph 6bi below. Public marketing includes but is not limited to flyers, yard signs, digital marketing on public-facing websites, brokerage website display, IDX or VOW, email blasts, multi-brokerage listing sharing networks, and applications available to the general public. Public marketing also includes marketing the property to real estate agents outside the broker's office. Place appropriate transaction signs on the property, except if paragraph 6bi is checked below. Use the seller's name in connection with marketing or advertising the property. Display the property on the internet, except the street address. Mark that box if they did not want their address on the MLS. Option B, not publicly market the public seller opt-out. Seller does not authorize the broker to display the property on the MLS. Seller understands and acknowledges that if the seller checks option 6bi, a for sale sign will not be placed upon the property. The seller understands and acknowledges that if the seller checks option 6bi, broker will be limited to marketing the property only to the agents within the broker's office. There's a place here for the sellers to initial to ensure that they understand this portion of the contract if they choose to do such a thing. Continuing on with number 6C, obtain information relating to the present mortgage on the property. Provide objective comparative market analysis information to potential buyers. So if you have this listing and you have a buyer who's interested, you're alerting the seller to the fact that you will be providing a market analysis to that buyer. E, check if applicable. Use a lockbox system to show and access the property. A lockbox does not ensure the property's security. The seller is advised to secure and remove valuables. The seller agrees that the lockbox is for the seller's benefit and releases the broker, persons working through the broker, and the broker's local realtor board association from all liability and responsibility in connection with any damages or loss that occurs. We also have an option here if the seller chooses to withhold verbal offers. That box would have to be checked. There's also an option to withhold all offers once the seller accepts a sales contract for the property. If that's the case, you would check that box also. If the seller does not opt to check that box, then you are presenting all offers that come in regardless of the status of the property. F, act as a transaction broker. G, virtual office websites. Some real estate brokerages offer real estate brokerage services online. These websites are referred to as virtual office websites. An automated estimate of market value or reviews and comments about the property may be displayed in conjunction with the property on some vows. Anyone who registers on a vow may gain access to such automated valuations or comments and reviews about the property displayed on the vow. Unless limited below, a vow may display automated valuation or comments and reviews about this property. The first box, if checked, indicates that the seller does not authorize an automated estimate of the market value of the listing or a hyperlink to such estimate to be displayed in immediate conjunction with the listing of this property. Option 2, the seller does not authorize third parties to write comments or reviews about the listing of the property or display a hyperlink to such comments or reviews in immediate connection with the listing of the property. Number 7, we have the seller's obligations. There was also no changes to the contract in this section. In consideration of the broker's obligation, the seller agrees to A, cooperate with the broker in carrying out the purposes of this agreement, including referring immediately to the broker all inquiries regarding the property's transfer, whether by purchase or any other means of transfer. B, recognize the broker may be subject to additional MLS obligations and potential penalties for failure to comply with them. C, provide the broker with keys to the property and make the property available for the broker to showing during reasonable times. D, inform the broker before leasing, mortgaging, or otherwise encumbering the property. E, indemnifying broker and hold broker harmless for losses, damages, costs, and expenses of any nature, including attorney's fees and from liability to any person that the broker incurs because of 1, the seller's negligence, representations, misrepresentations, actions, or inactions. 2, the use of a lockbox. Or 3, the existence of undisclosed material facts about the property. This clause will survive the broker's performance and the transfer of title. F, perform any act reasonably necessary to comply with FIRPTA, Section 1445 of the Internal Revenue Code. G, make all legally required disclosures, including all facts that materially affect the property's value that are not readily observable or known by the buyer. The seller certifies and represents that the seller knows of no such material facts, local government building code violations, unobservable defect, etc., other than the following. And this is the opportunity for the seller to put any known material defect facts or local government building code violations that they're aware of. Seller will immediately inform the broker of any material facts that arise after signing this agreement. H, consult appropriate professionals for related legal, tax, property condition, environmental, foreign reporting requirements, and other specialized advice. Number 8, compensation. There was not a tremendous amount of changes here. It begins off by saying the seller will compensate the broker as specified below if a buyer is procured. They changed the wording there slightly. Who is ready, willing, and able to purchase the property or any interest in the property on the terms of this agreement or on any other terms acceptable to the seller. The seller will pay the broker as follows. The option is a percentage of the total purchase price plus a dollar amount, or a dollar amount, no later than the date of closing specified in the sales contract. However, closing is not a prerequisite for the broker's fees being earned. Item B, a dollar amount or a percentage of a consideration paid for an option at the time an option is created. If the option is exercised, the seller will pay the broker the paragraph 8A fee less the amount the broker received under this subparagraph. 8C, a dollar amount or a percentage of the gross lease value as a leasing fee on the date the seller enters into a lease or agreement to lease, whichever is earlier. This fee is not due if the property is or becomes subject of a contract granting an exclusive right to lease the property. Broker's fee is due in the following circumstances. 1, if any interest in the property is transferred, whether by sale, lease, exchange, government action, bankruptcy, or any other means of transfer, regardless of whether the buyer is secured by the seller, broker, or any other person. 2, if the seller refuses or fails to sign an offer at the price and terms stated in this agreement, defaults on an executed sales contract, or agrees with a buyer to cancel an executed sales contract. 3, if within however many days you and the seller determine, after the termination date known as the protection period, the seller transfers or contracts to transfer the property or any interest in the property to any prospect with whom the seller, broker, or any real estate licensee communicated regarding the property before the termination date. However, no fee will be due the broker if the property is relisted after the termination date and sold through another broker. Retainer deposit, slight change here as well. They took out the 50% default. So it simply states a consideration for the broker services. The broker is entitled to receive whatever percentage the seller and the broker agree upon of all deposits that the seller retains as liquidated damages for a buyer's default in a transaction, not to exceed the paragraph 8A fee. Number F, all the way on the bottom of the screen here, is a brand new sentence. Brokerage commissions are not set by law and are fully negotiable. All right, so we're going to take a look now at items 9 and 10, and basically they're going to sound similar to some extent, but these have totally been rewritten. So let's get into these. Number 9. Notice to seller regarding the buyer's broker. The buyer's broker, even if compensated by the seller or broker, will provide services for the buyer. Seller is advised and is aware that the seller may, but is not required to, compensate a buyer's broker upon closing. Seller may choose to enter into a separate written agreement to pay the buyer's broker, or may approve the broker to pay the buyer's broker in accordance with paragraph 10. Seller also understands A, buyer broker may include this broker if the broker also works with the buyer on this transaction. B, if this occurs during the duration of this listing, the broker will be entitled to the compensation in paragraph 8 for services performed for the seller, as well as the buyer broker's commission in paragraph 10A for services performed for the buyer. The seller should therefore take into consideration when negotiating compensation. And C, the broker may receive a separate compensation from the buyer for services rendered to the buyer by the broker. So this really basically breaks down exactly what the seller's options are. 10, compensation to the buyer's broker. Brokerage commission is not set by law and are fully negotiable. Seller approves the following. Check all that apply. If no option is checked, then option C is deemed to be selected. 10A. The seller authorizes the broker to offer compensation to a buyer's broker in the amount of a percentage of the purchase price or a dollar amount. This amount will be paid from the broker to the buyer's broker from the compensation amount agreed to in paragraph 8. This compensation will be set forth in a separate written agreement between the broker and the buyer's broker. In this instance, you would use the selling broker to buyer broker compensation form. Let's take another quick look at 8. If option A, 10A, is going to be selected, the total compensation will be included here in 8A. This will be the listing and the buyer's broker compensation that you're going to include. Let's take a look at 10B. The seller authorizes the broker to offer compensation to the buyer's broker from the seller in the amount of a percentage of the purchase price or a dollar amount. This compensation will be set forth in a different written agreement between the seller and buyer's broker. This would be the seller to buyer broker commission agreement that we've already talked about in another video. If 10B is checked, then under 8A, you're only going to put the listing broker's compensation. Only the listing broker's compensation would go here. And on option B, the seller would be paying the buyer's broker separately, independently of 8A, so that would not be included. So if the seller is paying the buyer's broker independent of the listing broker, that information is going to go here for 8B. 8C, no compensation will be offered to the buyer's broker. 11 and 12, there's no significant changes. You may notice that the item numbers have changed a little bit because they added number 10, so that's the only difference. Number 11, brokerage relationship. Broker will act as a transaction broker. Broker will deal honestly and fairly, will account for all funds, will use skill, care, and diligence in the transaction, will disclose all known facts that materially affect the value of the residential property in which are not readily observable to the buyer, will present all offers and counteroffers in a timely manner unless directed otherwise in writing, and will have limited confidentiality with the seller unless waived in writing. That comes directly out of Florida Statute 475. Number 12, conditional termination. At the seller's request, the broker may agree to conditionally terminate this agreement. If the broker agrees to conditional termination, the seller must sign a withdrawal agreement. reimburse the broker for all direct expenses incurred in marketing the property, and pay a cancellation fee of whatever the broker and seller agree to, plus applicable sales tax. The broker may void the conditional termination, and the seller will pay a fee stated in paragraph 8A, less the cancellation fee if the seller transfers or contracts to transfer the property or any interest of the property during the time period from the date of conditional termination to the termination date and protection period, if applicable. 13, dispute resolution. This reads exactly the same as the buyer broker agreement. So under Florida law, any dispute will go to mediation first. If you check the box here for seller and broker authorized associate, then you will go to arbitration. If you do not check that box, more than likely you're going to end up in litigation. NAR, Florida Realtors, everybody suggests that you do arbitration because it's faster, and in the end, it typically costs less money. But of course, this is a broker-dependent decision, so please ask your broker if you're unsure of their policy. 14, miscellaneous. This agreement is binding on the sellers and brokers' heirs, personal representatives, administrators, successors, and assignees. The broker may assign this agreement to another listing office. This agreement is the entire agreement between the seller and the broker. No prior or present agreements or representations will be binding on the seller or broker unless included in this agreement. Electronic signatures are acceptable and will be binding. Signatures, initials, and modifications communicated by facsimile will be considered as originals. The term buyer, as used in this agreement, includes buyers, tenants, exchangors, optionees, and other categories of potential or actual transferees. Place for additional terms. You have the typical place for the signatures, the date, phone number, contact information. And then, of course, it's very important that you have marked on the contract when a copy was returned to the seller and in what format. There's a $500 fine if you are audited by FREC and they find that this is not filled out, and that would be per contract that this is not filled out on. So you want to make sure you do that piece. And then again, of course, you have the signatures or the initials at the bottom, and then that statement that's at the bottom of every page that this should not be in any way put into the MLS. So that is the new listing agreement for transaction brokers. Again, there are multiple listing agreements available to you: single agent, transaction broker, transition to transaction broker, no brokerage relationship, and an exclusive brokerage listing agreement. If you have any questions, please feel free to call us here at the association or the legal hotline. We're always here to assist you.